Alright, good morning, guys. I'm here again from IDA Investor Doctor Academy. So it's been a long time that I haven't talked to you guys online because I'm so occupied on the trading since the market is so volatile recently. So during this MCO, I hope everyone are safe and healthy and stay at home. Okay, so in meantime, let us discuss how the market trending for recently, and we're going to discuss the market sentiment from fundamental and technicals, and then how we're going to trade for the next step. Okay, for our next step, what we're going to do. Okay, so this will be our sharing for today. So the FKLI now we can see here. Let's take a look from the chart. Okay, we can see here is starting to form a V-shaped rebound. So now our topic today is to discuss whether the FKLI now is a rebound or just a bull trap. Okay, rebound is a real recovery from the market bottom, or by another things, the bull trap will be the temporary rebound in the downtrend, because we knowing that the trend is forming in a wave. Okay, it moves in a wave, meaning that it may not go down all the straight way, or go down or go up the straight way. Okay, it will form a corrective wave. We call, if you study Elliott wave theory, in the uptrend it may go down in temporary trend and then continue to go up, and then in a downtrend it may go up first, grip out a bit first, and then continue to go down further, which we call the corrective wave as a bull trap. So now today we have analyzed whether the FKI now is in a rebound stage or just a bull trap. It's just a short-term rebound in the downtrend. Okay, so let's start from the fundamentals. So for fundamentals, we have to analyze what are going on in the world nowadays. So what will be a negative driver for the days? I think everyone should know that the first thing and most famous is which will be our virus outbreak, which is COVID-19. Okay, the second thing will be the oil price. Okay, the slump in oil price because the production and then slowing demand, and then the OPEC and Russia cannot reach a deal to further cut the production more, so it make the oil price drop to very low. Let's take a look at the chart later. Okay, so the third thing will be our national deficit. So this happened worldwide because now the virus damage the economies, oil price also damage the economy, and then governments furthermore cut the rate or those monetary policies, and also introduce a stimulus package to recover the economy, which will involve a lot of fund. Okay, so this may indirectly increase our national debt, okay, and also the private debt. So the debt issue is also something I worry about right now. Okay, so in Malaysia, there's a specific factor in Malaysia, which is before the MCO, during the virus outbreak, our government changed again. So there's a create more politic uncertainty. So how will be this politic affect our Malaysian market? Let's take a look later. All right. So aside of this negative driver, we also take a look of what are the possible positive driver now to drive the global index market to continue rebound. So the only two things is that a lot of countries, they already introduced stimulus package and cut the interest rate, the monetary policies, okay, to stabilize the economy and further stimulate it. So it's not all bad things at this time. They still got good things, but how good is good? So let's take a look on that. Okay, if we search on the news, okay, we can see here. Alright, Dow dropped more than 900 points last week. So what we're gonna do for the next week? Alright, so we can see that the sentiment overall is still bearish. Okay, negative driver is more than a positive, and then it's also react in the market. Okay, we can see here the drop days is still more than up days, and then the buying momentum is still not yet that strong. Okay, but it's no lower low yet, so we have to look into it. Okay, oil price still drop as usual. Okay, and then okay, the downfall in the US is partly contributed by this because the cases is still increased doubling in these 3 days. Okay, so we knowing that the virus cases is still in the play. Okay, but US already do something. Okay, the houses passes 2 trillion coronavirus stimulus bill to recover the economy. Okay, but yet the market is still drop. So let's I will explain. I will share my opinion on why is this happen. So in order to we have to see a rebound. If we want to see a rebound from the market right now, okay, to determine whether there's a real rebound or just a bull trap, for fundamentally there will be something strong, okay, to push up the market. Let's see. So in order to form a real rebound, fundamentally, we need to see a slowdown of increased cases on in the virus, or there's new vaccine or cures or anything else they release in the market. Okay, or they start to cure people, and then the cases start to decrease, and they're going to be completely recover from the virus cases. Okay, we already see that China is already in recovering stage, so maybe the virus case I think can be contained before the second half of this year. Okay, let's see. So the rest will be depend on how fast the vaccine or the cure can be released into the market. Okay, but for now we don't see any slowdown of increased cases, so the rebound factor is not formed yet. All right, and then the second will be the oil. All right, the oil, the OPEC and Russia and US need to reach new oil deals in order to make the rebound in oil prices. Okay, but for now we don't have see any positive progress from these three parties, so we have to keep an eye on it and continue to track the progress if there is any oil deals between these parties. Okay, then the third, government able to cover deficit and economy recover in faster pace. Okay, so this one we need to observe it for a period of time because this one is a long-term game. Okay, if we look back on the 2008 the subprime crisis, okay, the market also took more than 1 year to recover. So this thing it will be not a short-term factor to prove that the market is in a rebound. Okay, but this will be a long-term play. Okay, which is a major thing that we still need to look into. Okay, so the fourth one will be the economy policy really work. Okay, which is this will link to the what happened in 2008. Okay, in 2008, the market started to recover after the US introduced the monetary policies, which is the printing money and also the interest rate cut, okay, the QE, and also the stimulus package. Okay, so during that time, the economic policy worked and then the market started to rebound, but why is not this time? So later I will explain. So now, here to answer your question for fundamentals. All right. So for me, the virus itself is not that dangerous, which it can drag down the whole economy, the whole market. Okay, the virus is not the case for me. The virus will be a catalyst which create a chain of reactions that will affect the global economies. Okay, because what will be the difference between these events and compared to the last event is that during last time 2008, um, yes, the economy is bad, but the people still can continue to work, the business still can continue to operate, to generate income, okay, to stimulate the money flow in the market, but not this time, because this time the people are not allowed to, the mobility is constrained, okay, and then a lot of business closed down during the MCO. So this will be a difference why the virus is kept so much impact on the economy, okay, compared to the last time the subprime crisis. One of them, okay, one of them. So we knowing that the economy needs spending. So even though the government already introduced the stimulus package, but whether the people got ability to spend, there's another question. Meaning that now if I give you the money, but how you gonna spend it if you can't go out, you only stay at home. Okay. So yeah, for now you can buy things online. That's true. Okay, but so we need to compare the online spending versus the normal spending, okay, which will be a different. Will it the online spending able to overcome, able to cover all the business lockdown or etc etc? Okay, for me it will not. It will not. Okay, for me the spending will compare to will be lower compared to the normal times. So this will how the virus do to the economy, why the market dropped down so much, okay, in a this just very short time, all right, and then why the US introduced a stimulus package, but the market is still continue to go down without strong rebound. That, from my experience, this can be the things, okay, that may affect the economy because the money didn't work well in this situation. People can't spend. This is one thing, okay, and then if the business closed down for so long, will they have enough cash flow to cover? Okay, this will trigger a bankruptcy in further stage, okay, but not now. So for now we didn't see any critical bankruptcy as compared to the 2008 subprime crisis. For now it's still stable, so we have to continue to look on it. All right, the unemployment and jobless claims, yeah, is already happening. So if this thing going worse, it can trigger a recession because the spending power decrease, and then it will increase the government spending too, and also the reduce in spending power, meaning reduce in demand. Okay, so this is how it affect whole economy. Okay, so this is how the chain of reaction of that virus can bring. Alright, so the oil, whether it's there or not, whether it can be deal or not, is still a question. So this one we have to continue to look for the news. Okay, that and deleveraging is something that direct from the chain of reaction of virus. Okay, so now we're already knowing that if you do some research from Google, you can know that now the national debt and private debt is really at high level. Okay, especially the virus case. Now this is a catalyst to further increase the debt. Okay, because companies, if your business can't operate, as usual, then of course you still need to pay for the worker, you still need to pay for the rent, you still need to pay for the fixed costs. So without the income, the debt will definitely increase, and also the swing in demand will decrease your income to cover your debt. So it will affect your ability to service the debt. Okay, so that will become to a deleveraging stage, which will mean that, okay, if you now your business or your household, all right, there should be some debt in your household, like mortgage, like car loan. This is what the government do, okay, to extend the payment. So during this time we have some buffer to generate the income to service the debt. Okay, so what if after 6 months, after this year, the people are still not able to cover the debt? So this will become a stage the market start to deleverage. Okay, which will enter a mid-term market technical correction. Okay, to reduce the debt until to a safe level, then the market can continue to go up. Okay, so can the economic policy grow further and how long it take? Because what I'm sure is, yes, the stimulus package now can recover the damage bring by the virus, at least part of it. We can't guarantee it can cover the whole part. But even though you are able to cover the whole damage bring by the virus, but can it grow further? Do we still have space? Do we still have the power, the ability to grow further after we recover from the crisis? If it's not, then the GDP will definitely slow down, the economy will definitely slow down. So which means that the market will enter a side where will not go to a higher highs. Okay? Because higher high you need very something good in the economy which will bring up the company earnings. Okay? Which I can't see for right now. Alright? And then how long it takes is also a problem because the recession can take a lot of times, seriously a lot of times. So this thing we have to continue to watch out. So how we gonna watch out? We have to look at the economy indicators. So how we gonna interpret and analyze the economy indicators? This one we will further discuss in our webinar online learning series. Okay, so the last question, which will only happen in Malaysia, and how long it take to gain confidence in Malaysia politics situation. So later I will go to the graph and show you how the politics in Malaysia can affect the economy. Okay, let's go to the graph. Okay, from this chart here, we can see the market stopped to make higher high since somewhere in 2018. Okay, we can see here our market actually going to start for a downtrend. Okay, sideways to lower trend from 2018. Okay, we can see here lower high, lower high, lower high, lower high, and lower low, lower low. So for now, we can see it is in a correction trend. Okay, so what happened in 2018? For what I can understand is that the change of government. After the change of government, it's not mean that the government doing bad or what, but it create uncertainty. Okay, this is what will scare off the foreign fund and also this fund manager when they want to make a decision. Okay, because comparatively, I can choose to invest in a country which the political situation is more stable, the economy is more stable. Okay, because change of government can mean change of economy policies. Okay, which may change of my investment appetite. Okay, appetite. Sorry. Okay, so fund managers, this fund will flow out and then see until the economy is stabilized, the political is stabilized, then the foreign fund will come back to support our economy, but not now. Okay, so for about the foreign fund, we can always refer to the foreign fund report from MIDF website. Okay, so we can see here, this is the latest report on 20th of March. Okay, we can see here since January 2019, the foreign fund is still outflow, and then our Malaysia is still among the lowest. Now the Thailand dropped more to chase us. So we can see here the overall for Asian market, the foreign fund is still withdraw. Okay, we can see here is still withdraw, meaning that overall is not good. Okay, so fundamentally I can conclude that for now it's not very bad yet because we can't see the bankruptcy in business, the slowdown, the real negative impact from the economy, but it's coming. Okay, it's coming. So now for me, yes, fundamentally it is a bull trap. It's just a temporary rebound in short term in the downtrend. Okay, because there is no certain factors, the absolute certain factors in fundamental, okay, to drive the economy, not yet. Okay, but it can go worse from what we can see now because the oil is still drop, the virus is still increase, and then we don't know yet whether the stimulus package can help the economy to grow further. So for now, but the bad things is already continue to growing, the debt is growing, the jobless, the unemployment rate is growing. Okay, so for now we can quite assure that the economy is more to a negative side now. Okay, but we always track the news to see whether there is a more positive drivers, okay, to drive the market. Okay, so now let's move into the technical part. So I will keep it very short. okay, to go through the technical part. Okay, let's start from our Mauritius. So from FKLI, I go to the money chart. Let's look at a very long-term time frame first. Okay, so money chart, we can see here a double top. Okay, bearish signal without any rebound pattern yet. Okay, then why we can see a short-term rebound? Okay, is because if I draw a FIBO from the low of 2008, the last crisis, okay, it hit about 38.2 FIBO level. So this is a technical rebound, okay, until the FKLI closed below 1,200 level to trigger another downside. Okay, so this is weekly chart. Okay, weekly chart, we can see here a doji or hammer-like reversal pattern with a green candle. So yes, this is a short-term rebound signal, but overall it's still in a downtrend with no confirmation. Okay, the volume is growing, yes, it's true, but we need to see the continuous growing. So for now, we can see it's a technical rebound. It need to close above 61.8, which is 1480 level, to continue rebound. Otherwise, it's just a technical rebound in the short term. Okay, let's look at the daily chart. Okay, daily chart also form a V-shaped rebound with a growing volume in the short term, but without any strong confirmation yet. Okay, then let's look at the US. Okay, US daily chart, we can see here the V-shaped rebound. Okay, but close with we can see here is a dark cloud cover. Okay, but we need to see the closing in Monday to confirm this signal, whether the market will drop down from here or continue to rebound. So from this, I can draw a FIBO to analyze the rebound. You see, okay, now it's testing a 38.2 level. Okay, so the maximum rebound will be at this level. Meaning that if the index, the Dow Jones index, is able to close above this level, yeah, this is likely to trigger a strong rebound signal. But for now, not yet. Okay, let us look into the weekly chart. Okay, weekly chart, if I do the same, let me draw from the money chart. If I draw the same like FKLI, I draw the FIBO from the high, okay, and then to the 2008 low. Okay, we can see here the US Dow Jones index touch the 50 FIBO level and then testing rebound. Okay, the strong bearish indicator will be C at here, this level, about 15300 level. Okay, here the 38.2 level, meaning that if the Dow Jones close below this level, will trigger a strong bearish trend. Okay, for now not yet. Okay, for now not yet, but we can see it's already break the upside trend line here. Okay, testing. Okay, so this level, let me check, is about 20,000. Okay, so close below 20,000, likely to test this level, 38.2 level. Okay, and then let's look at the crude oil. Okay, crude oil will be hit the lowest since 2002, sorry. So it's more than 18 years low. It's quite bearish. Okay, monthly chart without any rebound signal. Let's look at the weekly chart. Okay, weekly chart is still closed in red candles without any rebound signal. It's still bearish. And then let's look at the week. Okay, daily chart also showing the same. Close below a 20 will trigger another downside. So it's not any rebound signal in oil yet. So let's I do a summary here. So for FKLI, okay, what we can analyze from the technical side is that yes, it triggers a short-term rebound, but no strong confirmation for a strong rebound. So it is just a short-term rebound. So if I combine with technical, if I combine with the fundamental drivers, okay, I can conclude that both the technicals and fundamentals showing that the FKLI now just a rebound in a possible bearish trend, okay, which can be referred as a bull trend. Okay, for US Dow Jones, slightly better because it's rebound from the technical line, the 50 level, 50 FIBO level here. Okay, the trend we can see here, if compared to FKLI, is slightly better. Okay, so Dow Jones slightly better than FKLI, which I will okay. My opinion is that because the FKLI affected by its P ratio, okay, the earnings is not as high as the Dow Jones, so which making that the FKLI stay at a stage with what slightly worse than the Dow Jones, and also the political factor. Okay, slightly better than FKLI, but technical and fundamental showing us the same thing. And more too bearish. Okay, so for US markets, I also can conclude that it's in a bull trap. Lastly, for crude oil, okay, hit more than 80 years low without any rebound signals. From fundamental and technical. Okay, so it's definitely bearish. Okay, so now will be my short sharing for today. So we can conclude that for the now, FKLI is in a bull trap for me. Okay, more than a strong rebound, just as a bull trap. Okay, so how are we gonna trade for the next step? Okay, how are we gonna analyze this kind of economic data, economic indicators, and how are we gonna find the entry, the exit point, the trading strategy from the technical charting? Okay, I will share this further in our webinars. Okay, webinars will be at okay, the March one is already passed. The next webinar you can always contact through the WhatsApp link or the contact number which is shown under this video. Alright, so we'll be in Mandarin and English version. So to know more details, please contact our contact number or WhatsApp, or which is already provided under this video link. Okay, so this will be my short sharing for today. Thank you all for your time. Okay, hope we can earn more profit from the next crisis. All right, and then hope the market and also this virus can recover faster. Okay, thank you. See you guys next week.